Hello, everyone. Welcome to today's webinar. We'll get started here in just a few minutes, but I do want to give people a couple minutes to get into their seats. Hopefully, you had a chance to get something to drink, head to the restroom, anything that you needed to do. It's going to be a pretty fast-paced half hour. I'm going to jump into just a little bit of housekeeping here before I do the formal introductions. The Q&A tab is open and ready for work, as is the chat. I'll be in the chat and monitoring that as well. So if you have a question, put it into the chat or into the Q&A tab. We will be recording today's session and providing the slides to everybody. So you don't have to try to do screen grabs or feverishly write everything down. We will make sure that you have all of this information available. This is also important to note that this is just a sneak peek. We literally just got this data about a week ago, and it is fresh off the press. We wanted to share it with you, share some updates, a little bit of where the industry's going, and a few things along those lines. But there will be deeper dives into this data as well as a full report coming out in Q4 as well as Q1 and Q2 as we hit some of these key topics. Okay, with that, I want to go ahead and get things started. My name's Eric Gregg. I'm the founder and customer experience strategist at ClearlyRated, which basically just means I get to geek out in this kind of data and really help our customers and help the industry understand what customers want, what their talent want, what their internal teams want as well. So you may recognize us for our best of staffing competitions on the client, the talent, and the internal employee side of things. Also, Best Staffing Firms for Women is a program that we run and we're very, very proud of here, recognizing the firms that deliver the best experiences to their female employees, including the opportunities for advancement that a lot of firms do not. This is the first of multiple webinars that we'll be sharing on this research, but I did want to give a shout out to all of our research sponsors, the American Staffing Association, CareerBuilder Monster, ClearEdge, and Staffing Referrals. So thank you to all of our partners on this research that really help to get the word out and make sure that this is important, valuable research for you and your teams. So let's jump in a little bit. You're going to be hearing me talk about Net Promoter Score, giving some benchmarks today on Net Promoter Score. Simply put, Net Promoter Score, if you're not familiar with it, it was developed about 2 decades ago by a former Bain consultant, Fred Reichheld. Simply, how likely are you to recommend this firm to a friend or colleague on a 0 to 10 scale? The 9s and 10s are the promoters. These are the people that love you. 7s and 8s are passives. Consider them to be satisfied, but not loyal. And then 6 and lower is the detractors. These are people that have had some kind of a service-related issue, and the response to that service-related issue has also not met their expectations. Net Promoter Score is simply the percentage of promoters minus the percentage of detractors. Can go from negative 100, which is all detractors, to positive 100, which is all promoters. Thankfully, neither of those two situations ever happen. You're never going to make everybody perfectly happy, but you're also going to have a lot more success than not in the business. Again, this is the sneak peek. A couple things that are different from this year. We've been doing this study since 2006, actually, and I'll show you some data that goes all the way back to 2006. We had over 500 responses this year. For the first time in a long time, we really prioritized not just the US, but also Canada, the United Kingdom, and Australia as we continue to expand globally. We wanted to make sure that our global customers also had access to those benchmarks as well. I'll be sharing most of the data from the overall data set today, but I do break out US versus the rest on a few of these as well. So we're going to talk about really 3 key things. So the general industry overall, state of CX, the client experience. We will be having the job candidate experience study will be coming out and will be shared in Q1 of this next year is the current plan. So you can hold for that as well. And then some of the key lessons, like I said, we're going to be diving really deep into these, but there's always some things that jump off the screen at me when I go through and I look at this. And so I wanted to share some of those items with you as well. A little bit of backdrop on us. If you don't recognize us, and this is my sort of humble brag slide, we really work hard to make sure that the staffing firms we work with get great value. 89% rate us a 9 or a 10. 96% say the best of staffing helps them differentiate. 97% report a positive ROI. We power the customer experience programs for 300 plus staffing firms, protect over 70 billion in annual revenue in the industry. And work with 31 of the top 100 firms. So that's the end of me bragging or trying to sell you anything. We're now going to really dive into hopefully things that'll be really useful to you as you try to lead your staffing firms through what has really been a full 2 years of super choppy water. So let's kind of go into what that choppy water looks like. And I wanted to look at overall employment, layoffs and discharges versus quits. And you can see here on the layoffs and discharges, we're actually below. So we had about 1.8 million of those a month in the 2 years leading up to the pandemic. So March of 2018 to February of 2020, we're actually below those levels currently. And so we're in reasonably good shape from a layoff standpoint. On the quit standpoint, we had the Great Resignation that we talked a lot about. And really from early 2021, kind of mid 2021 to late 2022, we had a run of about 18 months where more people quit in any one of those 18 months than at any time since they started to track this data set 20 years ago. So we had just really truly historic quit levels. We're now actually 32% off of that peak level of monthly quits. And in fact, we're actually 11% below what the pre-pandemic level was. So one thing that we kind of forget as we think of people quitting their job as we emerge from the pandemic, but the reality is there's quite a bit of activity that was happening even before the pandemic. A lot of people quitting jobs, changing jobs, just a lot of movement in general pre-pandemic. So when we look at the hiring and the job openings, what we've seen is a decline here since kind of middle 2022 on the number of hires. That's not a surprise to anybody on this call and in this industry. And then the job openings, job openings were up so high. Well, they're still up compared to the average for the 2 years leading into the pandemic. Still about 12% higher than that, but they are down 34% off the peak. Hiring is down 35% off the peak and is actually now below pre-pandemic levels. So we had really a tight labor market going into the pandemic, and hiring was difficult, not so much because there wasn't demand for it, but because we were having a difficulty filling those positions, and not just us, right? Just anybody that was hiring and having difficulty filling those positions. And we're really kind of back in that place, except for the hiring itself is overall slowing down as well. Turning to temporary help, this is the BLS data. And what you're looking at here is temporary help is the bright green, non-farm employment, kind of overall employment is the blue. And when you look at that, what's interesting is that those lines kind of match up pretty well. The correlation is actually pretty high. And then we see it drop. And we've been in this industry since 05, 06, have been measuring this industry for that entire time, have never seen in the data, even before our time, really this kind of decoupling where temporary help was on decline for a significant period of time, even while overall employment continued to rise. And that's exactly what we've seen leading into the most recent data here. It'll be interesting to see October's numbers here in a couple weeks. But we did see a little bit of an uptick on temporary help according to the BLS data this last month, but it's still well behind what we've been seeing on overall employment. And one way that we kind of look at the way that overall employment and temporary help travel together is looking at this penetration rate. And so I just put a few of the high points on there. The top level is about 2.14% of overall employment was temporary employees. And we're all the way down right now at 1.7%. And if you kind of look at that, it's really been, with exception of the pandemic, about 2010 since we've had that level. So we're almost a 15-year low point on penetration rate. And it's really been one of the biggest drags on the industry. And so, what's causing that, right? Well, we looked at a couple things, and hat tip to the analysts and leadership team at Kelly Services who kind of put me onto this. But if you look at the year-over-year change in temporary help, and then you take what's called the anxious index, and this is the percentage of economists who actually think that there is a recession coming in the next quarter. So, for example, the Q4 number is already in place on this because they survey these economists in Q3 and they say, how likely, do you think there's going to be a recession in Q4? And the percentage of people that say yes to that is what I'm showing on this mark here as well. And so what we saw, and if you kind of look at this, it kind of looks like squiggles, but if you look a little bit deeper on this, what you actually see is that they're kind of almost inversely correlated, right? And in fact, they are pretty significantly inversely correlated. So as more and more people get concerned, or the prevailing thought is that we have a recession coming, people start doing less hiring of temporary help. And you can see along those lines that, as it gets to a certain level, the decline in temporary help kind of goes with that same piece. And so an easier way for me to look at it is just to take this anxious index from the Federal Reserve Bank of Philadelphia that they publish, and just flip it, inverse it, right? And if you inverse it and you take that same percent change in temporary help on a year-over-year basis, and you put this on there, you can really see, right? Oh, okay, it's very, very closely correlated. And in fact, you can see it during extreme times. It seems to really actually change that change in the optimism index, right? So the percent of economists who do not think that there's a recession coming. So the change of that from one quarter to the next tells us a little bit as to what's going to happen with temporary help overall. And so this is good because we actually have, a forward looking, it's not perfect. But when you look at this, what we would actually predict then for temporary staffing is that Q4 is going to be pretty flat. So likely compared to Q4 of last year, not down, which would be great, right? Flat would be actually a win compared to last year, because as an industry, we've been down about 10% in each of the quarters so far this year. So what's causing this? And I've been, kind of keeping this running list of potential causes in the decline in temporary help. You hear a lot of people talk about talent hoarding, but that's, at least within the publicly traded companies, it's kind of hard to justify that, because if you look at their, that would indicate that we would see profit dropping and earnings dropping, and that's really not happening in the public market. So I don't necessarily buy that one, even though I hear it a lot. Post-pandemic reset, definitely more SOW work. I'll talk about that in a minute. Increased use of independent contractors. We dug in this research, we dug into some of these, just trying to understand a little bit better what's going on. So one of the areas that we wanted to share with you was the benchmarks. I know a lot of people look to us for what are the benchmarks on Net Promoter Score. And we thought that this was an interesting analysis. We took SIA's list of all of the staffing firms greater than 100 million. And we know this industry really well. So we roughly know who's running a program and who's not. And if you look at the programs, where people are really running a CX focused program, which means that they're, getting feedback from customers, from their talent, and they're taking action on that. You can see the growth rate is about 16% improved over those that are not as CX focused. And so for a $100 million staffing firm, that's, real money, 17 million in additional revenue over 4 years, just by maintaining that focus on CX. So as we look at some of these numbers that I'm about to show you, just keep in mind that this is a really pretty key element that can help you to charge your growth in 2025 and beyond there as well. So this is, I said we started measuring this in 2006. You can see the Net Promoter Score in 2006 was a 13, all the way over on the left. You can see the score today at 45, the highest number we've ever reported. And it, at first kind of seems like, wow, how is that really true? Well, if you overlay all of the industry recessions on it, what you see is a pretty common theme, which is that when we're under economic duress as an industry. We tend to roll out the red carpet for our customers. And we really, really do those extra little things that drive a lot of satisfaction. So in the US, what we see is that number is 45, 34 for our Canadian firms, 37 for the UK, 47 for Australia. So in that sort of mid 30s to mid 40s is a pretty typical industry. That's actually pretty good for an industry. Anything 30 to 50 is pretty good. 50 or above is considered exceptional. 70 or above is considered to be world class. So we wanted to kind of share with you what we see within our benchmark. So this is the industry data. And I'll overlay that industry data. That's the gray line right there. But when you look at the firms that we work with, you can see the scores that we've had there. So up above the 70, which is that world-class level, the firms that we're working with. And in part, the reason why we have to set that industry benchmark separate of that is that, by definition, if a firm's working with us, they're more CX focused. We would expect their scores to be higher than a firm that's not getting feedback from customers, for example. And we see that to be true. The more important thing is really the trending as we look at that. So we see, in 2020, we had a nice increase. Again, as people got very focused on this. 2021, we kind of had the Wild West, and we gave a little bit of that back. 2 years where the declines were a little bit. And then these last 2 years, we've seen them go back up with people really driving significantly better outcomes for their customers. This is just looking at the percentage of our firms who improved their Net Promoter Score. You can see the high point on that was 2020, where 2/3 of the firms that we were working with improved over the 2019 scores. And it's down to about half. About half the firms have improved their score this last year. Part of the challenge of having high scores, anything above a 70, is that it's much more difficult to get improvement on that side than it is if you have a score down in the 40s or the 30s or even the 20s. There's more opportunity for improvement typically down in those levels. When we look at this on the median change in the client NPS, you can see here it's gone up by 1.4 points in 2022, 2.5 points in 2023, and 1.1 point so far in 2024. So hopefully some really good benchmarks for you to look at there. A couple things that we wanted to kind of, understand a little bit deeper, as these are some questions that we look at. How are we delivering on being proactive? How do we deliver on the responsiveness to phone calls and emails? And you can see, the scores here, 64% said that we're always proactive. 62% said that we are returning phone calls and emails within 24 hours. We did it as part of the study last year. For those that maybe don't remember, we asked a really important question, which is, what is your expectation on when you'll hear back from a staffing firm representative if you leave a voicemail or you send an email? And about 90% of people expect that to happen within 24 hours. So if it's taking you more than 24 hours to get back to somebody, especially during the regular work week, you are likely disappointing them on that side. So that's why we really try to understand this piece of it. The value given the cost is a really important piece. As prices have gone up, we are seeing people be more creative as they look at other ways to get the work done that they need to get done. And I'll go into that in just a minute, but I just wanted to share that piece of it. Now, this is looking at the opposite side. This is the percentage of clients who say that their primary firm did not, for example, resolve the issues within 24 hours. And you can see over 1 in 5 said that that was the case. If you don't do that, you have an impact of NPS of a -23, which means that the score for people that said that they did not have all of their issues resolved within 24 hours was 23 points lower than those that said that, yes, they did have any issues resolved within 24 hours. So this is really important because it's not, and I want to make this distinction, it's not that you never make mistakes. It's that if you have an issue, you resolve it to their satisfaction and you resolve that quickly. So that's the key piece. You can see over here, the third one down, the -27-point impact on NPS is providing candidates within the expected time frame. 90% of our customers said that we do that. Only 10% said that we don't. As an industry, that's pretty good. However, you can see the cost of not doing that in terms of satisfaction. It's a real driver. And we'll go deeper into this when we do the full report because there are some really interesting things that are tied there as well. So what are the things that jumped out at me? The first of which is, look, we're all trying to uncover growth. Very few of the customers that I talk to feel happy with the growth that they got in 2024 and 2020, so far, and 2023. And so, what we wanted to kind of look at was, okay, where are the opportunities? And the first thing that jumped out was we asked people what percentage of the overall budget they were spending with their primary staffing firm. And you can see, those that are spending 10% or less, 16% of customers are spending 10% or less with what they would consider their primary staffing firm. 39% are spending somewhere between 11 and 50%. 27% are spending, more than 50%. And only 18% are spending all of their budget with their primary staffing firm. So that means, even if you're not great at math, 100% minus 18% is 82%. So 4 out of 5 people, 4 out of 5 businesses are not spending all of their budget with you, which means that there's great opportunity. So how do we look at that? That immediate opportunity is 3 things, right? The first is that we have to earn the right to ask for more of the business. But beyond that, and that's where you can utilize the survey feedback to do that, to be able to see, okay, well, we have, great scores with these folks. How come they're not doing more with us? You've earned the right to ask for more of that business. But then you also have to identify those opportunities. And that's one of the areas that we see people really leaning in on now is let's really do some account-based planning and let's overlay who loves us, who are those promoters, and then let's go one step deeper and say, okay, who do we feel like there's additional opportunity out there where we are only, one of some or one of many as a part of that. And then leveraging that proof of excellence is really, really critical too. So I'll show that in just a minute. Promoters are 4 times more likely to expect a significant increase in their staffing spend. So again, you have to earn that. And if you earn that, there's opportunity there. You just need to go and harvest. We'd asked all the things that, the other ways that people are getting work done. And I think it's really time to be a little bit anxious about the non-traditional competitive threats. It's not the other staffing firms right now that have me as worried. It's some of the other things going on. So in the green, doing more work through SOW, that's great. That kind of still stays within most of the staffing firms here. But independent contractors through a marketplace or direct, investing in automation, increasing overtime, offshoring, those are all being done, with the exception of offshoring, those are all being done by, 50, 55, 60% of the people that are utilizing staffing firms. So they're looking at more creative ways to be doing that. And you can see, percent of them that said that they increased over 2 years ago. You can see about 50% said that they've increased the use of independent contractors. But when you look at things like investing in automation, especially in sort of the light industrial area, increasing overtime, those things are really coming to the forefront. Offshoring jobs or projects, we're seeing, well over around 2/3 that are saying that they've increased that over the last 2 years. Economic uncertainty. We asked folks, how they feel, right? So how do our customers feel about the state of the economy? 51% said that they thought that it was either fair or poor. And 41% thought it was getting worse compared to 33% that thought it was getting better. So I think there's still reason to believe that growth is going to come by taking share, not just by sort of riding a tide that rises all boats here. So we have to be really creative about how we go to market in a part of it. Looking at what people do during times of economic uncertainty, you can see, the vast majority of people are really focusing on the retention of their current employees. But then we see kind of the next piece, right? They're investing in automation. They're utilizing us. This is good news for us. They're increasing or looking to increase the utilization of their temporary help and their flexible workforce. And then we see things like, utilizing independent contractors and all the way down to some of the hiring freezes and a few things like that. Again, what this is really saying is that there's no one way where people react when they have economic uncertainty, but instead they're diving in on a couple of different paths. Maybe my favorite slide in the whole thing, and this was a body of research that Google did on general B2B buying. And what they found was that when businesses look to find partners and find vendors, about 8 in 10 have a day one list. And that is, who they're considering starting out before they ever really do any research. Oh yeah, I've heard of this firm. I've heard of this company for office supplies, whatever it may be. What was really profound to me was that they found that 92% of people ultimately bought from a vendor that was on that day one list. So, wow, if this is true for staffing, right, this is really profound because what it means is that we really have to get on that day one list. We have to be top of mind. So we recreated this for staffing. We asked hiring managers this question, and what we found is that 2/3, so a significant portion, have a day one list. And similar to what Google found, 93% of those ultimately bought from a staffing firm that was on that day one list. And so we looked at it a little bit differently. So it's important to note that of all hiring managers, well over a third, so 36%, did not have a day one list. And what we find is if they don't have a day one list, they look to build that list that others have on day one. And they do that through referrals and they do that through online searches. And it's about a 50-50 that start with reaching out to their network to get referrals, or that start online and then bolster that with referrals. And then you can see on the day one list, typically it's between 2 and 4 firms that are on that day one list. So you want to be one of those 2 to 4 firms that are on that day one list. Otherwise, it's really tough. But if you're not on that day one list, you can get added, but it means you have to show up in search. That search impact is really critical, and the reputation when people search is really critical. In fact, what we have found is really, people are looking kind of on 3 levels. If you think of this as like the foundational level is, can they do what I need them to do? And they're looking for things like tenure of recruiters, training, wide breadth of services. But where oftentimes we see staffing firms stall out is that they're also looking at, okay, well, they're great at hiring, but are they great at hiring in my space, for my size company, for the skills that I need to hire? That's the second piece of this. You have to get really specific on that side. And then finally, okay, I know they can do it, but how consistently do they do what they say they're going to do? And just because they can do it doesn't mean that they will do it. And that's where we look to see proof and de-risking the decision, showing that you can deliver and you do deliver for people just like them. And so if you really go to market looking at these 3 areas, this is really critical. I see a question in the Q&A tab, and please do put those in there because I'll make sure that we have a few minutes here. We're just about to wrap up, and I'll get to questions. But since this one is about this slide, I will do this. Really interesting last couple of slides. Are these going to be available? Yes, they will. They will be out to you by tomorrow, if not later on today. And then the last piece of this is the impact of AI is really unclear, but hiring managers have pretty high expectations for it. And this is a chart that I think is really interesting, just showing how quickly these models are improving. This is about a 6-month gap between GPT 3.5 and GPT 4. And you can see just how well it improved on all of these different scores and metrics on these standardized tests. The power is really, really there. Most firms are in some kind of an impact on this, at least exploring it. Only 14% of the firms said that they're not really doing anything around AI in terms of how it can impact their hiring process. So if you're utilizing these models to be more efficient, make sure you are getting credit for that in the marketplace. And then we asked them, what's their perception of the impact it'll have on staffing firm experiences? And you can see here the most common things that come up. They expect it to improve the time to fill, improve the candidate match. 70% thought it was going to help improve the candidate match. And you can see even the service delivery, right? They think that you're going to be able to resolve issues quicker, that you're going to be more responsive to calls and emails. So those expectations are really going to drive some of the things that we see in this space as well. And so with that, that's 30 minutes. It's fast paced. There's a lot of data. Like I said, we could probably spend, an hour or 2 hours on this, but I do want to be cognizant of time. I'm happy to stay a little bit longer and answer questions. First question coming in, do you see really considerable differences in some of these trends based on the geographic region? Actually, in the data, what we're seeing, and I suspect it's because, Canada and UK and Australia culturally are not dissimilar in a lot of ways to the US market. But we actually saw a lot of similarities across those markets, things that work in the US or sort of that buying process in the US, not dramatically different than what a UK customer would go through in terms of determining on the firms as well. What do you think is the biggest opportunity in 2025? A really good question. To me, the biggest opportunity in 2025, I'm going to give you two. The first of which is really having a strong strategy for not just staying close to your existing accounts, but identifying those opportunities. I really believe that and we've seen it in the data, the best opportunity to grow significantly is not somebody that's not spending anything with you today. It's in your P&L today. It's in your client roster today. Mine that roster, find where you're doing well, and go deeper. And then I think the other opportunity that I would say is sales enablement. As an industry, there's a lot of firms that actually do quite a good job on the marketing side of things. And almost every firm has a pretty strong sales organization that we run into. But there's this gap, and it's really that sales enablement, right? What are you doing to make your recruiters and your account managers the experts when they're sitting in that room, they're sitting on that Zoom call, they're reaching out via email? How do we bolster their expertise with thought leadership? How do we bolster their expertise and put them in spaces where they can really be expert on the industries that they're serving, not just general hiring practices or general career guidance as a part of it? Those opportunities, I think, are really, really critical. Is it too late to do best of staffing for this year? No. In fact, just reach out if you have any questions about best of staffing or the best of staffing program. There is still time to survey either towards the end of this year or early in next year to get in under that deadline. The announcement for that comes in typically in early February, those best of staffing awards. Another question on the award side, what does it take to earn best staffing firms for women? It's a really good question. We survey all of your internal employees. You get a great benchmarking report coming out of that. And then within that, what we look at is we look at experience by gender and making sure that your female employees are having a good experience there, making sure there's not too big of a gap between your female employees and your male employees. And then we look for leadership, just making sure that there's a reasonable percentage of your leadership team that are female, and just creating as best we can through the data and understanding of who is doing a great job with equity and opportunity on there as well. With that, it looks like I've gotten to all of the open questions. If you submit something I didn't see it, or if there's something else that we can answer for you, please do reach out. Like I said, this has been recorded, so you get the recording. You'll also get the slides. And if there's anything else that I can provide on this, I'm really happy to do it. Thank you so much for taking part in the webinar today, and I hope you have a great rest of the week. Bye-bye.